Good morning, good morning. How's everyone doing? Can you guys hear me? Just type Y in the chat box and we'll get things started. Nice to be live again with you guys. It's been some time. So I thought it was a good time to check in with you guys and take a look at the markets and see what's going on, see what's been transpiring. There's been a lot going on in these markets lately. In terms of the theme that is in play, you know, we may not be getting such large moves, but we are, we do recognize that there's a certain theme that's in play. Good, you guys can hear me, great. Members of our university, they know very well what's going on. We've communicated this to them quite clearly in the latest reports and the watch list videos that we've been doing. So we're going to touch base upon that just in a little bit and show you what's going on here. Yeah, you guys can hear me. Everybody's good? Good. I'll also let you know that I just was recently invited to join a online trading conference, which is pretty exciting. That just goes to show our work is being recognized. What we're doing here is really special, very unique. Nobody is doing the type of analysis that we are doing and the perspective that we bring to the markets, which is pretty exciting. So when I get specific dates and links, I will share that with you guys. So that's some pretty cool stuff coming up in May. A lot of exciting things this year, guys. I'm telling you, this is going to explode. What we're doing is just gaining traction. People are starting to recognize that what we do is very accurate, very unique, and it brings a whole new perspective to the market. So this is great stuff. All right, so I asked you guys what markets you wanted to look at. And I got gold, nat gas. You guys want to look at oil. I also saw, I think, the Aussie in there, Euro, US dollar. So we'll look at those today. But first, let me bring up the latest, if you guys haven't seen, the latest set of data from the CFTC reports, okay? Let me bring up here the Euro US dollar. Okay, here's a very interesting one. Okay, we've been pointing this out for some time now. If you take a look at the, oops, that's not what I want. If you take a look at the longs, okay, the long positions being held by the institutions, what can you see? 244,000 just on April 11th. That's what they recorded, okay? That's significant. Why is it significant? Because if we take a look at their maximum size position, 266,000, we're not that far away from there, okay? So they are reaching max long positions, which means they're going to have to start taking some profits, right? They did so a little bit here, and then they start to pile in again. And if you've been paying attention, as I've been pointing out, if you've been paying attention to the positions that the retail traders are taking on, they're being massively manipulated at these highs, all right? They're being suckered into getting into long positions. So they drop price as retail traders are getting in short. They rally price as retail traders were getting in long, or sorry, short. And then as price is dropping, they continue to add long. So they're offloading those long positions when they're dropping price. Okay, and just recently they pushed price back up again. And they lured more long traders because as price was reaching the lows, retail traders switched those longs into short positions and they bumped price back up again, right? So let's take a look at the Euro chart and look at what took place here. So we've been tracking the positions of the retail traders, all right? And as you can see, they were adding short positions as price got up here. Now look at where they were. Look how many short positions the retail traders had at those highs, okay? So that's taking a massive loss because they were shorting as price was going higher and higher and higher. So eventually, retail traders can't add any more short because they're way under. Okay? They're way under. So once they receive such a big drawdown, they have to exit those positions because now they're thinking, okay, I got it wrong. Now it looks like it's going to go up, so let me switch to those longs. And that is when the banks are offloading their long positions to the retail traders. But remember, the banks are at max size. So it's going to take some time for them to offload all those positions, all right? And this is why we're getting this type of price action up here. They drop it, bring it back. They drop it. Here was the latest area. We got into short positions, and we had a really nice trade set up here. Let me show you what that baby looked like. I've been mentioning that when you trade supply and demand and you understand what's taking place in the markets and you understand what areas of supply and demand you need to be focused on, then you're able to locate key institutional selling areas if you want to get into shorts and buying areas if you want to get into longs. So here's the chart. Here's a 15-minute chart. And I posted this for members because what I was pointing out was this key area here. Okay. Now it doesn't look like much to your average trader, but when you understand how to locate supply and demand on the charts, you would understand why this was a key area for us to be watching, okay? This was a buying area that the banks were using to propel price to the upside. So the banks have all these orders to buy right at this level. So that means that when this area gets taken out, guess what the banks are interested in? They're interested in taking price lower. So price was in a larger time frame supply area, and we had determined that this area was going to be used to drop price. And the trade signal was to wait for this key zone to be removed. And when that zone was removed, whatever supply was being brought into the market and to remove that area of demand, that was the area to short from. Okay? So let me show you what that ended up looking like. Let's go forward and I'll show you what that looks like. So here comes the supply. You see the big red candles? That's the supply. That's the banks coming in and selling. Now we're watching for that key area. We're watching for it to be removed. Price comes down, hits that key area. You see what's happening there? All right. It's responding to demand. Now take a look. Boom. You see what's happening here? All right. So this was the supply area that the banks were coming in with the significant selling. All right. So what typically happens when the banks are selling is they create an area where they have all their orders to short. And so they come into the market and they push all these sell orders through in the market. And what will typically happen is after they come in with the supply, they'll retrace back up to those supply areas to fill in the rest of the orders that they have to trigger. So here was the trade signal. That was the supply zone. Now watch what ended up happening, okay? There it is. It's removed. Price starts to rally back up. Take a look. Do you see that? This is it. This was the entry. Entry here, stop loss here, target lower on the charts. Now take a look at what happened. Watch this. Boom. You see that? You see the massive move? Here's the initial move of selling. Here is the supply zone. This demand area was removed, so that's the signal to get in short. And once they rally price up back into that area of selling, look at the move. Look at how much they came in with their selling pressure, okay? It was quite significant because if we play it forward, look at that, okay? You see? Look at that. You see? You see how incredible that is? Okay. So what ended up happening after this is price has rallied back up, okay? Now, for me, what I'm seeing here is a very strong push up and a very strong push to the downside. Now, this is something that we've been talking about in our classes. When we do our classes here at the school, what we're always analyzing is historical charts. The reason being is because Everything has already happened. And that's so vital to understand how to read price. Okay, if you really want to understand how price moves on the charts, you have to look at what already transpired and you have to follow the story. And the amazing thing is that you get to see the whole picture. So after studying charts for, I don't know how many years I've been doing it now, over 10 years now. Once you've been doing this and you've been looking at the supply and demand imbalances that come in from the banks, you tend to start to see things that really stick out. It takes a while to do that because you have to put in countless hours. I've put in at least 40,000 hours. They say you need 10,000 hours to become proficient at something. Well, I've put in over 40,000 hours. It's probably more than that. But when you spend this much time analyzing charts and you know what to look for, okay? You could spend 40,000 hours looking at charts and not get much out of it. But if you know what to look for and you know how to study the charts, the information that you can get is invaluable. And so we've looked at price action like this several times. Big, strong move up, big, strong move down. Now, it's not when it just happens, at a random place in the markets. It's when it happens at key areas of selling by the banks, which is what took place here. Okay. Now, I believe what happened here was at this point, as price was going up, retail traders were getting in short and short and short. And I was pointing this out on Twitter and in our Telegram channel. They were accumulating such a massive short position that at the highs here, they were at 81% of their positions were short. 81%. So what happened then? Well, price was entering into a supply area. So what do you think was going to happen? A move to the downside, which is why we took the short trade. Okay. So we got that move to the downside. It stopped here. Guess what happened down here? Retail traders figured, oh, shoot. I guess because they were switching into long positions at the highs here. And as price was dropping, they were getting into long positions, long positions, long positions, long positions. Here at the lows, they figured, okay, I guess it's not going to go long. Let's go short. And that's when they pushed price right back up. So since then, we got that big spike up and big move to the downside. I suspect this was just to lure in retail traders to get in long again by surpassing the previous highs. Because lo and behold, look what's happened ever since. We've gotten this big move to the downside, okay? So you can see the manipulation going on here with the euro. And I have a very strong feeling that when we get the next set of data, we're going to see these long positions declining, all right? I think they're going through a process of offloading their long positions. So what does this mean in the grand scheme of things? Well, I think I have a bias that price is going to be dropping further, okay? Now, it's very difficult to pinpoint exactly how price is going to be moving because one of the things that we like to do here at the school is we like to take a look at the multiple time frames to determine what is likely going to happen, okay? We like to look for trends, we like to look for structures, and we like to look for institutional buying and selling areas so we can determine what is in play and where is price going to eventually move to. So the tricky thing when we look at the monthly chart of euro is that we don't have a trend, okay? Now, you might have some people thinking, well, you had this move to the downside, here was the lows, here was the highs, and we've broken those lows to the downside. So don't we have a downtrend? No, we don't have a downtrend, okay? It's a downtrend when the banks say it's a downtrend. How do we know when the banks are saying that it's a downtrend? Well, again, this is what we study here at the school. When you look at historical charts and you look at what it looks like when they are creating a trend, you will see very specific formations. You will see a move to the downside, some basing, a move to the upside, some basing, and then a move to the downside, taking out previous lows. But the candles have to be structured in a certain way because a lot of times we get moves, look, we get moves like down, up, down. Well, isn't this high higher than this high? Isn't this low here, higher than this low? Does that mean it's a downtrend? No, it's not a downtrend, okay? It's very key to understand these concepts. They're somewhat basic, when you can wrap your head around the idea that you need a downtrend for there to be momentum to the downside. But most people, you read these books and they're being misinformed because all they're being told is you need price to drop, make a lower high and make a lower low, and you got a downtrend. And that's terrible advice because that doesn't make a downtrend. So how do we know that this isn't a downtrend here? Well, there's a few reasons that we know that. First of all, you think logically about what's taking place here. You see this rectangle I'm drawing? This is ranging. Price was ranging. Look how long price was ranging for, okay? And then it broke the range to the downside. So if you were to look at this high here, and look at this high here, and look at this low here, and look at this low here, you're trying to relate these moves to the overall move to the downside, and saying that a trend line like this should tell us that this is a move to the downside. Well, let me ask you something. Just think logically about this. When price was up here, do you think that the banks had intentions to create a downtrend at that point? I think not, okay? Because they were in a range. The range, this dynamic only broke down here, okay? So I would not use this area here and speculate that this is the beginning of a downtrend, because during that phase, they were ranging. Same thing with here. When you look at price action here, they were still within a range. So you shouldn't even be considering this as part of anything to do with what was taking place here. For there to be a downtrend, it would have to start here. There would have to be a move down, basing. So far, so good. We've got all that. A move to the upside. Then we would need basing. And guess what would need to happen next? We need something like that. Okay? Now that I would consider a downtrend. But another key thing that you need for a downtrend is what? What would you need for there to be a sustained move to the downside? I mean, the only people who can create downtrends on these charts are the banks. The big institutions are the only players that can create downtrends and uptrends. Not us regular traders. We don't have the strength in the markets to be able to dictate price action like that. So you'd need institutional selling to come into play, okay? Significant selling, which means supply zones would have to be created on the chart. So if we had a move to the downside like this, you know what else we would need? We would need an institutional selling area to be created. If price was to make a significant move to the downside and create institutional selling, then that is when I would say we have officially a downtrend in the euro. Okay, so we don't have a downtrend in the euro. So then what do we have? That's the question. Well, let me show you what we have, because it's important to understand what it is that we have so you understand why price is moving the way that it is. So if you take a look at this chart, what you'll notice is that we have a selling area here and we have a buying area down here. Okay, that's what we have. So price is technically in a range. What does that mean? Well, it means that price can drop, hit this demand and rally, and hit this supply and drop and hit this demand, and then maybe eventually break to the downside. If not, break to the upside. So over the longer period of time, we suspect that price will be in this range because this is what they are creating in the charts. They're creating supply here, and they're creating demand here. So unless one of those areas get taken out, to speculate longer term where the euro is going to go wouldn't be the greatest idea. Now, since we are up near this supply area, and the banks need to offload a massive long position, what do you think will happen? What logically would you conclude? I mean, logically, you'd have to conclude that price is likely going to be dropping, okay? Because when they force the market with all these long positions, they're going to have to look for liquidity. So that causes price to go lower and lower and lower to find that liquidity. All right. When they offload longs, that means they're not piling into longs. If they're not piling into longs, there can't be upward momentum in price. Okay. So this is what is taking place here. So don't worry about anything else that's happening on all the other time frames, because it really is insignificant. Okay. If you're looking for 1 hour downtrends, thinking that you're going to open up a short position and hold it for a longer period of time, it will work over the short period of time, but to suspect that you're going to be getting price to drop much, much lower, below the 96s, it's unreasonable to think that. Okay. So just remember what is in play here. This is very key. So let's go on to something else. So that's the situation. Okay. Now, when we look at the weekly chart, as I've indicated to you guys before, I've been circling these areas here as a way of showing me visually what the institution's positions are looking like. When we have darker green, that means they're very aggressive with long positions. So you can see at the lows, what did they accumulate? A very big, large, long position, which caused price to rally up here. Just like over here, they were accumulating a short position, and look what happened. Look what happened when they got very aggressive with their short positions. This is where we had the turning point, okay? Because when you have an aggressive short position and you can't add any more to your shorts, what do you have to do? You have to offload them. So that causes price to reverse to the upside. So that's what's taking place here. We're also contacting a weekly area of supply. It was once tested here. We're getting the second test here. We're likely going to see this coming into play and price begin to decline. So if you're going to trade the euro, you have to remember two things. Number one, the monthly chart is in a range, but we're at supply. And number two, the banks have a massive long position and they have to offload them. So offloading them, even though it's going to cause some bearish pressure, if you get into a short position, you have to understand that there's going to be a lot of turbulence in this move, okay? Because if they were specifically getting into short positions, they would create structures to the downside. They would create supply zones on the lower time frame, and you'd be able to use those structures and those supply areas to time your short trades. But when they're taking profits on long positions, they're not creating those structures the way that you'd want to see them. So if you're going to get into a short position, you have to understand that there's going to be a lot of turbulence, and you got to have the emotional capacity to sit through all that. Okay? So that is what's taking place with the euro. Any questions you've got, I'll gladly take any of them. If not, we'll move on to the next chart. And we'll take a look at what else is happening. Just post the questions in the chat box, and I'll be glad to answer them. Okay? So that's the euro. So keep that in mind. That's what's taking place, and that's why we're seeing this price action right now. Okay? Let's take a look at gold. So what's going on with gold? Well, first we'd have to take a look at their positions. Let's see. What have we seen lately? Well, take a look. They've been accumulating a long position. We've been pointing this out for quite some time now. But they're not offloading those longs. Not that we've seen. I mean, a slight decline from April 4th's 266,000. But we're not seeing any significant offloading of long positions. Could they do it timed with the drop in the euro? Yes, they could do that. It's very possible. All right. Shorts, they're not piling into shorts. So if any move was to come from gold, it would be simply from some profit taking. Why? Maybe they want to drop price down, ride the momentum to the downside to reaccumulate and get back in and push up. Okay. The key thing to remember is they are not at maximum positions. So if we take a look back here, they are not near max. Max is 408,000. They're only at 260. They've got a long ways to go. Okay. They got a long ways to go. And when we look at the gold charts, we can see that they're creating uptrends on the higher time frames. So there's nothing to indicate that price isn't going to continue higher over the very long period, okay? Let's see. Questions. Hi, I'm new here. Could you explain a little bit about your courses, please? Yeah, sure, I could do that. Let's take a look here. So if you come to our website, whiteoakfx.com, you click on education. We explain to you what it is that we're doing here, okay? To make things really short and simple, there's a type of learning. It's called classical education. It's a type of curriculum. It's an old way of teaching people, of educating people. We don't teach people, we don't teach students this way anymore. It hasn't been like the classical education for many, many years. Some would say about 100 years it's been since we've been teaching people using the classical traditional methods, okay? So when you study philosophy and you study how people used to learn back in the day, it was through a process of grammar, logic, and rhetoric, all right? It's a way of accumulating data, processing that data to make it something that you can understand, and then studying what you understand to make it turn into wisdom, okay? Having an understanding. So we take this process of learning that, once again, hasn't been used in the school system. So when you join our school, you're not only going to learn how to trade, but you're going to learn about the classical way of learning, okay? What a classical education is. We're going to retrain your brain on how to collect data, think logically about it, think critically about it, and come to conclusions about it. And then pile these conclusions into a knowledge base, into your mind. We really encourage people to use journals because there's a lot of information that you're going to absorb. But I can promise you, when you absorb this information, it'll be information that you will use for the rest of your trading career, okay? If you're looking to use trading as something, as a way to supplement your income, or if you want to make it as your full-time job, what you're going to learn here is not something that you will want to unlearn, because it's like building blocks. When, you know, if you go to the library and you go to the section for how to learn how to trade, they can teach you hundreds of different methods of how to trade. There's Bollinger Bands, you name it. The list of indicators go on forever. The problem is that when you're relying on an indicator, it's just like your typical person relying on CNN to tell you exactly what's happening in the world. Well, you know that there's a bias with the news corporations, okay? Because you have to understand, whoever owns them, they dictate what's going to be presented. So if you want a full picture of what's taking place in the world, you got to have multiple sources of information. You can't just trust one source. You have to have multiple sources. But you also have to be grounded in some understanding about the world. When you're grounded in a certain understanding about the world, you can collect all these pieces of data. You can think critically about them and come to conclusions about them. And if your process is incorrect, then the conclusions you will come to will be wrong. But if your process is correct and your knowledge base is correct, then the conclusions you will come to are correct. And this is why when we do analysis, we're so dead on, because we've been collecting information about the markets for many, many years now. I've been doing this for many, many years now. And so there's certain things that we come to know about the markets. There's certain truths that you will come to know about the markets. All right. And when you come to these certain truths, you can apply these truths to current price action. You just look at current price action. I mean, one of the latest things that we've been looking at, and this is why I've been pointing these things out to everybody, because it's so key to understand the big picture. You have to understand that the markets right now, the stock markets, when you look at the actual data, I don't care what CNN has to say. I don't care what CNBC has to say. That means nothing to me. The only reason I would ever listen to them is to see what they're trying to convince people of. All right? Because when you understand what they're trying to convince people of, that gives you a lot of information. Now, I look at raw data, and because I've studied the raw data, historical data, and I've looked at the charts, and I've looked at what happens when the banks accumulate such a massive position, long or short, what happens with price? And then I watch and I study what kind of trends do they create? What kind of zones do they create? How long did that trend last? I study these things and I've journaled them, and I've collected a vast amount of knowledge about the markets by going through this process. Okay. So what I'm pointing out here is that if I look at the raw data, S&P 500, what do I see? I see that the non-commercials are accumulating a massive short position. I mean, not since last year did they have a position like this. I mean, just look here, up until 2020, December. They've never had 109,000 short. Look at the long positions, 40,000. You see the coloration of these cells? They're blue. I programmed my templates to show me the coloration so I can see whether or not they're aggressive with their position or not. When cells are blue, that means they're not even focused on those positions. When cells turn red, that means they're focused on them and they're aggressively accumulating. So then I go through the Wall Street Journal, and I know, those people who own the Wall Street Journal, they own a lot of other publications, newspapers, television stations, and they're also involved with the big banks that are trying to accumulate a position. So what do you think Wall Street Journal is going to post as the banks are trying to accumulate a short position? Okay. Remember, for the banks to be selling, there has to be a buyer, right? For the banks to be selling, there has to be a buyer. That's just common sense. So let me show you something here, because I posted this just the other day, but I want to show you what I'm talking about, okay? April 24th. Let's bring this up. Here we go. Here's an article posted on April 24th on the Wall Street Journal, okay? And what does it say? Individual investors flock to stocks. Now, if you're just a regular trader, investor, and you're sitting at a coffee shop and you're like, all right, I feel like making some trades in the markets. Let me go through the Wall Street Journal because they're going to tell me everything I need to know about the markets. Let me see what their expert opinion is. All right. So you open it up and you're like, individual investors scooped up shares of single stocks and exchange traded funds at a near record clip in the first quarter. So what are you thinking about? You're like, oh, darn, I'm missing out. They're telling me individual investors are scooping up shares. Well, they're not telling you if they're doing the right thing or the wrong thing. And I suspect they know exactly what they're saying, okay? Because, again, when you track the news, when you track the positions of the banks, the retail traders, and you look at price action, you start to see certain coincidences that continually happen over and over and over again. It gets to a point where you can't unrecognize the fact that it's always so perfectly timed. When you have the Wall Street Journal coming out and pumping stocks, okay, individuals bought a net 77.7 billion in equities and ETFs on U.S. exchanges in the first 3 months. Now listen, they're not telling you buy the market, but these are bullish statements here, okay? And they're written to induce an emotional response. All right? This is how this works. This is to induce an emotional response. They're trying to get people to buy the market as the banks are selling, okay? So the banks need to sell, but they need a buyer. How are they going to get all these buyers? Well, they use their media to come out with these articles. So you read these articles and you're like, so many people bought. I'm missing out. Must be, it's the herd mentality. It's the crowd mentality. Whatever the crowd does, I'll do. Because they can't be wrong. If the vast majority of people are thinking about doing something and they're actually doing it, maybe I should jump on board before, Bill from down the street tells me, oh, I bought the market last month and I'm making some good returns. Did you buy? No, shoot. Were you one of those guys that the article was talking about? Yeah, I guess so. Oh, darn, I missed out. Nobody wants to miss out. So what they do is they just jump in, okay? But as they're jumping in, the banks are selling. So this is what's actually taking place, okay? This is the real stuff. So understanding this whole process, you need to understand the classical way of learning, okay? And so the classical way of learning, going back to that really quickly, is the grammar, logic, rhetoric stage. So you need to be able to collect data, think logically about it, and come to conclusions about it. And then you have to test to see if those conclusions are correct. If those conclusions are incorrect, you need to figure out what it is during your process of collecting information is incorrect. So that's the first thing you're going to understand when you become a member of our school, is you're going to understand the new way of learning. Now, we have 3 levels of education because just like in any other process of learning, you need to understand the basics first. The basics are, supply and demand, what are the banks doing, and the positions. If you understand how to locate the institutional buying and selling areas, that is so essential. You need to learn that first. So we do our classes. All right, we have classes where we teach you, we look at historical charts, and we teach you how to locate the buying and selling from the banks. Once you know how to do that and you can display that you've accumulated those skills, and it takes time, it takes effort. A lot of people come to me and they're like, oh, how long is it going to take to make it through level 1? I don't know. What are you doing on a Saturday night? Are you partying or are you studying? What do you do when you wake up in the morning? Are you working a full-time day, but you can only put an hour a day into your work? It all depends on how much effort you're able to put towards this. It takes work. Nothing comes easy. We get many students that come, they join, they're like, oh, this is too much work, and then they leave. Then they join 15 other courses that give them nonsense, and they end up coming back and they're like, okay, I get the point. It requires work. If I want to make a living from this and I want to make good returns in the markets, I have to understand these concepts. There's no other way to be consistently profitable unless you find some magical niche of yours. There are some people that study price action and they just trade price action. But that's not going to give you constant, consistent results. If one day you want to retire and you don't want to sit, like a gamer sitting at your computer screen, looking at charts 24/7, it might be fun when you're young, but when you're older, you want to live life. Okay. You want to go on vacation. You want to spend time with your families. You want to go for lunch with friends. You want to play some golf. You don't want to be sitting at screens all the time. So that means you're going to have to be able to understand how the market works and where it's going to go over certain periods of time. Wouldn't it be powerful to know that the market is going to be dropping over the next 6 months, the next year, that gold's going to go up for the next 2 years, 3 years, 4 years? Wouldn't it be important to know that if you wanted to invest in gold? I mean, if you don't want to be sitting at screens 24/7, you're going to want to look to open up positions and to hold them for a certain period of time. But how can you open up a position for a certain period of time if you aren't sure about the direction of price? You won't be able to do that. Most traders that try to hold positions for longer periods of time, they go under and then they keep on adding to their losing trades. And they only hold them because they're hoping and praying that it's going to go in their favor. That's not trading. People don't even have any clue what they're doing, most people. All right? So you need to understand these concepts if you want to think about this long term. And you really should be thinking about this long term because the markets aren't going anywhere. That's the one guarantee. The markets aren't going to go anywhere. And secondly, they're not going to move in any different ways. They've been doing this for a very long time. I go back and I take a look at historical charts going back to the 70s and 80s. It's the same concepts, same principles. The only thing different is they had a lot more people manipulating and creating these structures. Now they got it all through algorithms, which is making it even easier because the structures are they all look the same. Okay, when you see them taking place 10, 15 years ago, they look exactly the same today. So level 1, you're going to learn these basic concepts, okay? Once you can display that you've accumulated the skills, and we have a process of doing that, where you submit homework to us and I review the homework. Once you can display that you've accumulated that knowledge, and these are all the things that we touch upon, giving you new perspective on the markets, understanding supply and demand principles, we introduced a brand new concept of how to draw trend lines, not just your typical trend lines that you can find from 1,000 other books out there. No, how to draw institutional trend lines. You might be thinking, well, what's the difference? Isn't a trend line a trend line? No. The vast majority of people drawing trend lines, they're doing it all incorrectly. All right? There is a correct way. And I'm not just saying it's correct because it sounds good. I prove it to you, and our members know that. When we draw the trend lines, we can see why they are correct. The market will always tell you if your analysis is correct or not, just by looking at the price action, okay? The Sherlock analysis process is a way of analyzing the charts to come to conclusions. How do you know that the zone that you draw is correct? How do you know that the trend line that you drew is correct? There's a way of analyzing the charts to be able to give you this information. Very powerful. How do we keep our risk low? How do you enter into a trade, enter with small risk, and build your position large so that eventually when you take profits, you're making big profits, but your initial entries were with low risk? How do you do that? Most people try to do that. It's like the Holy Grail. Nobody can figure out how to do that. There have been some people, but in my studies, whenever I've looked at large traders, big traders that we all know, some of you may not know, but when you look at their success throughout the years and you understand their background and who they are and why they are so successful, it really doesn't come down to them, having technical analysis skills. It's really about them having some insider information. It always does come down to that. So what does the successful student of level 1 achieve? Here's what you achieve. All these things here. Okay. When you're done level 1, you graduate to level 2. What's level 2 all about? Level 2 is about structures, locating structures, advanced supply and demand concepts, institutional trends. How do you know if there's a trend? How do we know? How do we locate trends? What do they look like? Then we talk about the CFTC spreadsheet, the importance of using it, how to collect the data, all that good stuff. Level 3 is the final stage. We teach you about the force of price. It's a concept nobody's ever talked about, but it's what drives price action in the markets. Then the market sequence. How does price move? What kind of sequence does it follow? If it hits a monthly supply zone, where's price going to go? And when it hits that next demand zone, where's price going to go from there? And when it hits the next supply zone, where's it going to go from there? That's the sequence, okay? Personal portfolio management. How do you manage your portfolio? How do you manage your trades? How do you get into a trade and have a target so that when that target gets hit, your trade is free, okay? It's untouchable. It's bulletproof. How do you locate these type of positions? How do you locate these type of targets, I should say, and so forth? So these are the 3 levels that we teach at the school, okay? Hope that answers your question. All right, so learning about forgiveness. Beautiful. Okay, so let's get back to what we were looking at. We were looking at gold, I believe, so let's take a look here. So that is what I've been seeing lately, okay, is that some supply has been hit on the daily chart. Supply is being created on the lower time frame charts. There's a likelihood we're going to see some bearish pressure, which is why I gave the forecast short-term move to the downside is what we're expecting. But longer term, we're expecting a move to the upside. Okay? No problem. Thanks for the detailed explanation. Justin Hale writes, I've been a member for 4 months, and I am currently a level 2 student. Do yourself a favor and consider joining for 3 months. I'm blown away daily by what I'm discovering. Hard work pays off. That's nice to say, Justin. Yeah, well, we have a 3-month promotion. So for the first 3 months, you only pay a one-time payment of $175. So that $175 will give you a good understanding of what you're going to be learning in level 1. It's not going to teach you anything about level 2, level 3, because you haven't graduated there. But level 1 will lay it all out for you. Plus, you'll get to see our portfolio, our trades, why we're taking these trades, the thinking behind it, all that other good stuff, the watch lists that we do, and so forth. Okay? All right. So gold, nat gas. You guys have been talking about nat gas. So nat gas is an interesting one. And again, I've had discussions with people about nat gas, and everybody has opinions. Everybody's so full of opinions. But the bottom line is nobody tells me about facts. Everybody's always telling me, oh, nat gas is going to go lower because of these economic reasons and because of this and because of that. Okay, but that's not facts. Facts are banks move price, period. Okay, that's a fact. Another fact is the banks had 470,000 short back in February. That's a fact. The fact is that's very aggressive when you consider what their positions were just back in November 2022, 303,000. So when positions become so aggressive, what needs to happen? They need to take profits on those short positions. That's a fact. When positions drop from 470 to 451 to 418 to 403, that means they're profit taking on short positions. That's a fact. All right. So when you flood the markets with short positions, guess what happens? It goes up because they need to close those positions. Market moves up. And that's what we've been seeing lately. Now, look, they accumulated back again. Why do you think they did that? It was to push price back down. Where do you think we're heading right now? If you think logically about what's taking place here, logically, you will conclude that we are going to see shorts diminish from 408 to 400 and then down to the 300,000s. Okay? And as that is happening, what is taking place? They're accumulating a long position from 270,000 to 315,000. That's a fact. I don't care about economic reasons why natural gas should do whatever. I don't care about that. I don't care about what some expert said on CNBC. I don't care about that. I care about the real raw data. I care about the supply and demand on the charts that the banks are creating, and that's what I make my trading decisions off of. So when people say, oh, how are you so accurate? Well, I'm just looking at the raw information. I'm applying logic and critically thinking about what's taking place and what I know to be true because of what I've studied in the past, and I'm coming to conclusions about it. And so what would be the logical conclusion on this? If the banks are taking massive profits on short positions, would you want to be entering into a short position long term? No. If you're retired and you want to go on vacation and you want to travel Europe, or you want to go spend some time with family, you want to go play golf, and you just want to enter into a position and hold it for a year or two, would it be entering into a short position on natural gas, or would it be entering into a long position on natural gas? Okay? I mean, logically, there's only one conclusion. So when you come to the conclusion that, hey, maybe it's probably best that I buy natural gas right now, I think there's a very good opportunity that price is going to be reversing. I should be probably buying. Then you need the technical analysis to be able to determine where you're going to enter it, how much risk you're going to put on, and where your stop loss is going to be. All right? Once you have those things in place, it's all about what kind of supply structures need to be removed in order for me to get a technical trade signal that I should add to my overall long position. And you could have an alert set above supply zones. You could be on the golf course and you get an email saying, hey, the banks took out that supply area that you determined when it gets removed, price is going to continue to the upside. Add to your position. You can open up your broker account on your phone and add to your position. Hey guys, 1 second. I'll tee off in 3 seconds if you just don't mind. Let me just add to my natural gas long position here on the golf course because I got an alert. Add to your position. Away you go, back to your golf game. Okay? Because this is going to take some time to play out. As you can see, it's been taking several months. All right? But this is what we do. It's based in reality. So this is why Justin is saying that, you know, he's blown away daily by what he's discovering, because this is truth. When you discover truth, it's mind-boggling because it's like, oh my gosh, this was happening this whole time and I was just not recognizing it. Yeah, it's been happening for a long time. So really important to understand these things. Okay, so that's natural gas. That's what's happening. So it's going to take some time. Okay? You see what I have here? This is the demand area. This is where I suspect price is going to be rallying up from. Boom. Like this. I got my targets on my chart. I'm already positioned. I'm just waiting. Just waiting for it to play out. Okay? Those are the odds. If I'm wrong, I know exactly where to get out. I'm not going to hold this until it goes to zero. I know exactly where to get out. I know what demand zones have to be removed for me to get the signal to exit. And then I'll just wait for them to reaccumulate. And when I get the signal that they're going to start pushing price up, I'll re-enter again. Plain and simple. Okay? If you don't know exactly what to watch for, you know what's going to end up happening? You're going to get into a long position, price goes lower and lower and lower, and you're going to add to your long as it goes lower and lower. And then guess what? They're going to shake you out of your position. And then when they start going higher, you're going to be so nervous about getting into a long position because of the money that you just lost, and you're going to not know what to do. When you know exactly what to look for, the zones that need to be removed, the signals are very clear. Okay? You just wait for the next signal and you enter in again. It removes all the thinking behind the trade. All right? Okay. So nat gas, also you guys wanted to look at oil. So oil is a bit of a tricky one. Oil is a bit of a tricky one. There's no trends here. What I can tell you is that we contacted a weekly area of demand. You see down here? That's a weekly demand zone. So guess what happened there? Well, they started accumulating. That's the buying area. They got price up, but they couldn't push it all the way up to supply, and now it's dipping back down. Would I want to be trading oil right now? The bottom line is I don't want to be trading oil. Okay? Because there's nothing specific to be trading oil off of. Now, there is some things that we're looking at that is kind of making me lean towards the fact that oil might be dropping over time, okay? But we're not there yet. I need to see some significant demand zones be removed before we can ever conclude on that. All right, so that's oil, that's gold. I did not gas, euro. I'll take one more. The first person to send me a chart name, I'll take a look at it, and then we'll move on and end the session. Nice 51 minutes. You guys enjoying the session so far? Good, good, good. Let me know what charts. SMH. What the heck is that? SMH. Vanex Semiconductor. But what are you thinking about on this chart? You're thinking about going long? What are you thinking about doing? I see right now that they are reacting from an institutional demand area here. You see the big move to the upside? That's institutional buying. But we're also hitting institutional selling area, so we're stuck in a range. Okay? We're stuck in a range. So pressure is to the downside. Okay? Pressure's to the downside. So you're thinking about shorting? Okay, so you need structures to base a short off of. I don't see any structure on the daily. I see something here on the 4-hour, but it looks like it's already played out. Okay? Again, when you talk about the structures that we talk about in level 2, look at that. Look at the distance here. Look at the distance here. It's already run its course. So push to the upside short term is likely, inevitable. So I wouldn't want to be shorting here. Okay? Daily chart for a longer term move to the downside hasn't created any structures. If anything, the only structure that I see here is to the upside. Take a look. Right there. That is the structure to the upside. All right? And this here doesn't look like institutional selling to me. All right? So if there's no institutional selling there, do you think I want to be getting in short if price was to get up here? Not really. Nope. No. I would want to see some really nice structures to the downside. I want to see institutional selling coming in, and then I would short there. That's what I would do. But you'd have to understand that this daily downtrend, if they created it, would be within the higher time frame monthly ranging. So what happens in ranging a lot of times, guys? You know this, at least some of you do, because you're members and you know. Drops, retests, and goes. So how do you know where price is going to stop dropping? You don't know where price is going to stop dropping. So I would, hold off on taking a trade like that. Okay. A good entry would have been a test of that supply area and just managing your trade very closely. That would have been a decent trade, because when price goes up, it's likely not going to go and test deeper into that supply before it drops. Okay. So your position would be in the green most of the trade. Kev, can we take a look at Aussie Japanese yen potential short setting up? Okay, we'll take a look at a few more since we haven't done a session for a while. What else was I going to look at? Oh, silver. I wanted to take a quick look at silver. Silver. Okay, so here's another reason why I suspect that gold is going to be dropping. Because gold and silver pretty much run alongside each other. There's a pretty good correlation there. And what do we have here on silver? Look what's being contacted. Okay? A supply area. In a range, demand is here, supply is here. Price rallied up from demand, dropped from supply. You see how it didn't go all the way down and it stopped and reversed and went up into supply? In this case, it tested even deeper into that area of supply. All right? So what is likely the next move? Downward pressure. There's no way silver can continue going up until this area of supply gets removed. Period. End of story. No argument whatsoever. Okay? You don't know something for a fact until it actually happens. All right? You can speculate that, eventually this supply is going to break, so let's just buy pullbacks. But you don't know that for a fact. When you know that for a fact is when supply is broken, then you know for a fact price is likely going to go higher. Why? Because they just removed their only obstacle from keeping price from going higher. Okay? That's pretty much it. That's what it comes down to. So that's silver. Let's look at Aussie Japanese yen for a short, potential short. So supply is in play. Yeah, on the daily chart, price rallied up into that area of supply. We got a nice significant drop. Monthly uptrend ended because we contacted a higher time frame area. Trend line's in the process of being broken through. Okay, so for the Aussie Japanese yen to drop, what would you need? First of all, you need weakness in the Aussie. All right, so the only way Aussie Japanese yen is going to drop is if you get weakness in the Aussie or strength in the yen. Strength in the yen means the US dollar Japanese yen is going to drop. Now, here's the problem with that. There is a significant area of buying here on the Japanese yen, the US dollar Japanese yen. Significant area. So again, you shouldn't be speculating that it's going to drop. You know for a fact it's going to drop when that demand zone gets taken out. If there was no demand zone holding price up right now, okay, and there was no demand zone just underneath the Aussie, which is what we've got right here. Look at this. This is significant demand here. That means price drops, then it comes into demand. What do you think would likely take place after that? Pressure to the upside. Aussie Japanese yen. For it to go downwards, you need a weak Aussie and a strong yen. Right now, I see that if weakness comes into play, it's going to be short term until demand comes into play, and then it's going to be bullish pressure. And the US dollar Japanese yen, we're already reacting from demand. Okay, could price drop and then bring in strength in the yen? Yes, it's possible, but you don't know that it's going to do that, and you don't know how it's going to be sustained because that demand hasn't been removed yet. So I would think about it this way. What do you think is a higher odds trade longer term? Shorting the Aussie Japanese yen or going long natural gas? Okay, after what we just went through. So I think the obvious conclusion is going long natural gas. That's what I would conclude, because everything is pointing in the direction that it's going to go higher. Okay, so you got to trust what information you're gathering from the markets when you know what to look for and you know how to think critically about it. So Aussie Japanese yen, yes, you can get moves to the downside. They would be short-term moves. So I'd be careful with shorting that. Look at the weekly chart. We got an institutional demand zone just below price. So could price continue lower until that demand? Yeah, it's possible. Just be very careful with it, okay? We already contacted supply. It's already started to make its move. So, you know, I would just be very cautious of that. I personally wouldn't take that trade. EQT is an American natural gas company, by the way. Let's take a look. EQT. EQT Corporation. Okay. Nice upward pressure. Falling short of hitting demand. Yeah, it shifted momentum from downwards on the monthly to upwards. Yeah, okay. Looks pretty good. Nothing tradable for me, but looks like, you know, it's shifting momentum from downwards to upwards, which is pretty good. All right, guys, I think that is it. I don't want to bore you with any more talk. If you liked today's session, hit the like button, share the video. I'd appreciate it. Like I said, I'm going to be doing a trading conference next month, so when I get details on that and links, I'll share it with you. If you want to learn what we do, if you want to take on this journey, you want to plan for your future, you want to retire, and you want to trade properly, and you want to spend the next 5-10 years accumulating knowledge that you're actually going to use, as opposed to wasting your time learning things that are just going to give you bad results, www.whiteoakfx.com. Come to their school, learn what we're doing. It's really incredible stuff. We're really being noticed by other traders, other institutions, and it's really amazing to see that we're gaining steam here. Okay, so join us, and yeah, look to have you with us. And thanks so much for your time today. Enjoy the rest of your day, and we'll talk to you guys later. Take care, everybody.